Now I want to cover ranges again used on time frames such as 4 hour and the 2 hour. Now, 4 hour and the 2 hour ranges are quite, I won't say they're quite important, but they're quite useful. They're quite useful overall. So going back to GBP AUD, obviously on one of the other videos, I'm not sure if you may have watched it or if you haven't watched it. If you have, then we had the Fibonacci from the highs down to the lows, to the retracement, to the target achieved. Now, with that being said, on top of all of that, if I can just make this a little bit more translucent, there we go. Yeah, on top of all of that, we can actually put in ranges as well. So when the market is a little bit choppy, a little bit all over the place, we can use ranges, drawing it on with the simple rectangle tool, and then we can wait for the breakout in order to execute a trade into short or long territory. Now, most of the time as well, the ranges are very, very easy to actually draw onto the charts. Why? Because the ranges, you can already see it visually bouncing from support, resistance, to any of the key levels which you've already placed on. So, with that being said, let's go over to gold at the moment. So gold, this is the range of the fib. This isn't the kind of range I'm talking about here. I'm talking about price range, consolidation range. But Fibonacci overall, ultimately, we are looking at higher prices on gold, higher targets. So coming down into the 4 hour time frame, just focus on the green area for a moment, we can see the market and the price is ranging from resistance, support, resistance, support. And it was trapped, but now it's broken out. This is where it can get interesting and quite easy to utilize. Guys, we only want to trade in the direction of the overall trend. I've already covered gold on one of the other videos, on the moving average video. With the moving averages, we want to ensure the weekly and the daily are in the same alignment, so to speak, aligned in the same direction. Now, what we see in the range is we can use the moving averages with this. So number one, steps. Is this break and close above or below the actual range. Steps, moving average crossover, where does that come in here? It comes in right here. Where does the break and close above come from? Here. So what we've actually seen on this gold, on the daily time frame, where this breakout has occurred on Friday, if I look at the daily, strong bullish engulfing. Strong bullish engulfing. The moving averages are up on the daily and the weekly. So what we've seen was false break. So these here on the daily were shooting star, two false signals. What can help us stop jumping into the false signals is moving averages. Trade in the direction of the crossover. So here, coming down onto the 2 hour, or even sometimes on, sorry, that was the 4 hour, this is the 2 hour, we can actually utilize these ranges along with the MA crossover in the direction of the overall trend and a break and close above or below the range. So we've actually closed above and we've held above that on the daily, which is important. The price has been held above. The daily candlestick, if we look at that, it's a bullish engulfing. It's engulfed the entire range here. 1, 2, 3, 4, 5, 6 candles. And then we've also closed above the daily resistance. So this is a range breakout. What I'm expecting now on this is probably a pullback, maybe to test this region of support before going long. So guys, you can either jump in, if the risk reward makes sense, if the higher time frames, everything aligns and everything makes sense, jump in on the breakout. I would always recommend as well, when the time comes to around 5/6 p.m. London time, and you're not in a trade for the day and you're waiting for a setup to come through, I would just wait until the daily closure settles. So if it's 5 p.m., 6 p.m., just wait until 10 p.m., 4 or 5 hours, for the daily candlestick to then close. Why? Because then that can give you added confirmation. So here, for instance, That was in the US session. It's a 4-hour time frame. Started the US session, then boom, we had the closure at 10.62. 10.62. So looking at that, it was 2 when it broke out, which you could have got in. If you only spotted the breakout at 6, then you could have easily just waited for the daily close. Again, this is an example. That's Friday's candle. Let's say, for instance, that's a Tuesday candle or even a Monday candle. You could then go in because at 10 p.m. GMT. Remember what I said on the other video? Daily closure. If we'd get in the close at 10 p.m., entries and executions are best to go in at around 11, an hour later. All right. So that's that. Easy range utilized. Same thing over here as well. This is a 4-hour time frame. There were no breaks. We had this break over here. However, this wasn't a range. What has made up this range is more or less this piece of price action. You can't go in and draw boom there because there's no range here. This is still making little discrete lower highs, and so on. Only once we can see the consolidation, and if we go to the daily time frame, bounce. We can see the spikes, retesting support, retesting resistance. We're in a consolidation area. 4 hourly, we had the breakout here, okay, which is brilliant. Stops for this breakout strategy in particular, the stops will go 15 pips on the opposite end of the box. $15 pips above or below opposite end. So that would be your stop. Your actual entry would be there. Nice clean breakout. Wait for the candle to close. Targets are as follows. Sometimes the market will do this range height again, but we want to more or less combine ranges and consolidation areas with our top-down analysis. What's the weekly doing? What's the daily doing? And so on. So that's that there on the GBP AUD. Another interesting piece of analysis here is the Aussie dollar. With the Aussie dollar, Fibonacci is present, so I've gone from Fib A up to Fib B over there. It's gone from the lows, and I've averaged Fib B against the highs, the monthly resistance, 7,750. We've pulled back recently, and we've seen there, boom, we've came into that region, in between 78.6 and 61.8. We've come into that region. Now, we have that, and we also have our target coming in at 7,900 on the Aussie, which is around 560 pips away from current price. What we're seeing here on the Aussie is we've had a breakout of the counter trend line overall, so I've got it from point 1 to point 2. We've had the breakout, we've had the crossover, breakout after the retracement. We're still above monthly support, 7,400, okay? And we're looking for this to rebound because this could be breakout, retest, continuation on the daily time frame right there. Are there any zones of consolidation I could probably use or utilize right here, right now? No, I can't say there is on this Aussie. Can't say there is on this Aussie. Definitely some over here. Aussie's been relatively smooth sailing, to be honest. Smooth sailing. So I'd always check the daily, then I'll come into the 4-hour time frame. If there's nothing there on the 4-hour time frame, then I won't draw. So more or less, we could put these rules, take these rules into consideration. If you're drawing a range on the daily, okay, which we could probably find one here on the euro. This could be the range on the euro. We can then step down to the 4-hour time frame in order to find the execution. If you find the range on the 4-hour, you then step down to the 2-hour. So it's daily to 4-hour, 4-hour, 2-hour. And then you can then sit on the lower time frame and wait for your entry and execution as discussed. So over here, I am actually favoring longs on the euro. There's one thing this could do, though. It could come back down into this Fibonacci region on the daily. This is A, B, C, D. In between the zone of 61.8 and 78.6 before going higher. That's one scenario. So what we could do, if we wanted to trade it from here down into this Fib region, if we are expecting shorts to come through, then The crossover's already happened, step one's already happened, yeah? We would wait for the break and close below on this 4-hour time frame because it is a daily region. If we come back up and the moving averages then cross over, the blue ends up being on top of the red, as same as this over here. You can then go long only once we've had a breakout of this zone. So we're breaking the resistance and breaking the higher boundary of this consolidation range. Okay, so crossover, break short into this region, cross over to the upside, break long, then we can take it to our next monthly area of resistance over there as well. So you can always break your regions and ranges up into two scenarios.